silence that color. Yeah, so I'm going to be focusing on the MACD, okay, in this strategy. So Idowu, I hope this video gets to you. You requested for this and I decided to put this video together as I promised. So we talked about trend trading, okay, the last time we talked, okay, we chatted on the Telegram group and I said, if you want to make use of indicators, you have to first of all understand the chart, your chart. You have to secondly understand what you are trading, the instrument you are trading. Okay, you don't just start trading a pair you don't know. Okay, so you have to understand certain basics like what the characteristics of a trend. We have the up, like the uptrend, the downtrend. Okay, and you got to know when to buy, when to sell. Those things you need to know. You have to know stuff like support and resistance zones. Those are zones where prices are likely to reverse. Okay, you already know all of that. If you do not know that, please drop a comment on the comment section. Ask your question. Maybe I could help you out with a video that where I explained where I explained that topic. Okay, and I can also send you PDFs as well to use. Okay, so for the purpose of this video, so I don't keep it long, I want to just share an idea with you what you can use actually to trade. And this is Boom 1000. You can use this on any trading platform. I'm going to show you this. This is on deriv.com if you're trading Boom, Crash, VIX 75, and all of that. Okay, it's the same rule. Okay, so you have to know how to make use of the trend. You have to know when a trend is over and when to look out for another trend. Like this is a trend originally on the bigger time frame. This is actually a downtrend on the daily time frame. So the H1 just did a pullback and crossed back. This is why I use moving average as well. The moving average has just crossed to confirm that the trend is continuing. And what do you have here? You can also see that the MACD as well has also crossed here and has remained flat down here. So while price is flat here, you got to be looking for just sell positions around these zones here. If you've been going through my video, you remember. So all of this zone right here is where you want to be looking at for sell. You can see that the market crossed here. After crossing here, you can see that the MACD as well crossed here to confirm that it's going to sell. Okay, then you begin to look out for sell positions around here. You don't go against the trend, guys. Don't. There are times where the market will cross and cross again. You wait for conditions to meet, or else just leave it. Now, in such trend, I want to show you how you can actually follow this. After this video, okay, look out for the next video where I will show you how to use stochastic for trend continuations, only on the trend. Okay, guys, so this is how to use MACD, how I use MACD. Check my previous video on how I use the MACD, okay, the MACD strategy to catch pips in the market, okay. But this is another variation of how to use MACD. Now you spot that the trend is downwards, okay. Let's use a more recent data. If I want to use this data here, if I go to 1 minute right now, we will not be able to get to this data of 15th and 11th December, okay? So I have to go to, because the time frame is smaller, and this is, I'm using a phone, I'm using a phone for this analysis and for this video. So I'm recording this video using a phone, not a laptop. So if I was using a laptop, probably we could have been able to check the history. But as long as it's 1 minute, there is a limit to which we can have the history on the laptop as well with the phone too. So let me use this view. Okay, now we already know that the trend is established. It's a downtrend. Okay, the two moving averages have crossed right here. Okay, so it is selling on H1, right? And what we're going to do is we're going to start looking out for sell opportunities going to the 1 minute. Even at that, it's still far away. So I want to look for a data that is a little bit closer, like nearer, where we can use. Okay, let's use here after the price retested this zone, and closed back inside the 200. So let's start from here. So what I'm going to share with you now is how to use the overbought and the oversold. Remember that we have the MACD on our indicator chart, view. And you can see the settings right here. We have the 80 and the 20 right here. So the 80 here is, we take the 80 as a location where we can call the overbought and the 20 for oversold, if you don't know that. Okay, so now you can see that price is trending downwards right here. And while price is trending downwards, you observe that the stochastic, the MACD has already grown to this point, and this is above the 80 level. Let me drop the line here. Let me make that settings bold. Yes, so the levels. Let's see. Okay, let me just use this. Let me just drop a line there. This is 80, yeah, and this is 20. So please take note. Let me change this color to let me use black. Yeah, so you can see that price is at levels, at those levels there. I said to use black. Okay, ignore the 0.17 and the rest. Let me make it round figure 80, because it's actually 80 we are dealing with. Yeah, so that's oversold and overbought zone. Okay, so now this is it. Price, every time the price goes above the 80, you begin to look out. Hear me, I said begin to look at. I didn't say just jump in. You begin to look out now for price action. Remember, the condition is that price, whichever direction it is, if price is trending below the 200 moving average, okay, price is actually doing a downwards movement like what you can see here. You have to completely zoom in, okay, zoom in completely to have this view perfect. I don't want you to do this. I don't want you to extend it like this. I don't want you to open it this way, okay. Just zoom in completely. Make sure it's completely zoomed in, okay. Now, when it's like this, you know that price has been trending downwards, right? So what are you going to be looking out for? You just have to be looking out for every time price goes above the 80. That's after there is a pullback like this. Price was trending downwards, and then the market pulls back, pulls upward, like does this movement, retraces back up. And when it does that, you also observe that right here at the indicators chart, the price pulled back and then got exhausted, got above the 80. Okay, you begin to look out for opportunities to sell. Look, even when it immediately crossed above the 80, okay, even right here, you can see that this price got here, and at least from here to here is a lot of pips, guys. It's a lot, depending on the lot size you're using. And then it pulled back again, and still at the same location. Price is still within the range of the 200. It hasn't broken out completely. Take notes. It just broke out a little, faked out, and then closed back in. Now, I mean that when you see this happen, wait for price action, you know. You can see that this is a price action, you know. Price went back and closed back bearish, and didn't just end there, closed back inside the price, inside the band. Okay, not the band this time around. It closed inside the moving average again, meaning that the trend has resumed, okay. And in such scenario, you can get in right here as your entry, okay. You get in right there as your entry and take your trade, and probably, you know, set your stop loss anywhere around here. Just give the a little room to breathe. Remember that there is another support here, resistance here. Remember the downtrend to contend with. So just drop your stop loss a little bit above. And please, this helps you to, this is not a scalping strategy, this is a swing strategy. It helps you to swing longer, you know, stay on a trend. Use this with a trend. Now when you get this, please use the lot size that is meant for your account, so that you don't begin to freak out. And don't get greedy when you see this happen, because sometimes it can get to that point, and if the market wants to eventually change location, it might just dance around this zone for a while. It might just go up, go down, go up, and then before you know what's happening, to break out, okay, and start a fresh trend the other way. So that's why you have to protect your account, and then use a lot size you're willing to lose. Use a lot size that will not hurt your account, just in case you got into such market that wants to change direction. The market doesn't change direction all the time, so this will not fail. So this is more of an 80% guarantee success for your trading. This is 80% guaranteed, okay, meaning it's a good strategy, it's a good way to trade. Now you can see that, okay, price, I said it's for a swing strategy, especially when you see it on H1. You know you're in for, when daily is saying sell and you see this happen on H1, you know H1 is the baby of daily. You can see an overbought signal on H1. Just know you're in for a long ride, okay. This is it, and you can see that price did all of this and came down. Now that's one. You can see The same thing when it happens. And I know that whenever you're moving your charts, when you're checking history is when you're checking the history, you notice that, look at where we have the MACD. You can see that right here it was showing overbought. Okay, but when we shift this way, okay, this was actually overbought from the beginning till we got there. But some of them will change, like what you have here and here. From here and here, okay, it actually changed when we're moving. So in such cases, I will show you where that was okay. Now, if you are using H1 to trade, okay, you wouldn't have gotten into that. Okay, look at another situation where there was an overbought here. Where there was an overbought. Look at this situation. Okay, it got to overbought, but this time around, the price has stretched too much out. But remember that, first of all, this was a downtrend from the daily. This is actually daily trend. So if I see this happen here, okay, what I'm going to be doing is I'm going to wait patiently to see price come back into the 200 and retest like what we have here. Then when it does a retest, I will check what the MACD is also saying. And you can see that right here, the MACD eventually crossed for a sell. This is when I'll begin to take this, knowing that there is a retest, meaning that price has come back into the trend according to what the daily is doing, okay? So in this situation where price stretches out, wait and follow the next signal, okay? Don't jump in. Guys, this is a problem with people when they get a strategy, they just begin to use it carelessly. A tool, no matter how good a tool is, if you give it to the wrong person, it will become a disaster. So please don't just forex trading is not a joke. It's no child's play. Don't just get in here and want to throw your money. You have strategies to give you an edge in the market. No matter how good a strategy is, it will still cost you losses if you don't use it well. So for those of you who actually look out for strategies, especially those who are looking out for a strategy that is 100%, well, I'm sorry to disappoint you. There is no 100% strategy anywhere in the market. You have to make use of trend lines. When market is trend. Look at this is H1 daily, H1, right? Let's check daily. This is where we were at daily. Now this is, remember I marked that zone as H1, but you can see that daily was already selling. Price is already trending downwards. I mean, this is, if you follow what I'm showing you right here, you will make a lot of money following the right trend, okay? This is that very, look at, this is that very, remember that trend line I drew in H1. I just want to show you that when you're following the daily time frame, you go to the H1, okay, and look out for price action and structures that support the bigger time frame. That's the only way you can stay in this market. Use a smaller size and trade well and make money. Don't over risk your accounts, please. Now this is it, and by the time we'll go back now to the H4 time frame, we are going to see where price is. We're going to see that. Let's check for that price. Okay, this is it. I mistakenly moved it. This is the same place. So market interprets itself this way. Now it was the right here, this did not move out completely too much because this is H4. Remember, there are different time frames, but the trend is daily. And then on H4, the movement was not much. And then remember, there was a cross here. There was a cross here on H4. So the bigger the time frame, the better for you when it comes to swing trading. Okay, but if you cannot wait, you can make use of the H1 for the swing as well. You can even make use of 30 minutes and 15 minutes following this pattern. So you can see that on the daily time frame, it was actually a sell trade. Now let's go back to the H1. So now, seeing that daily is selling and you begin to see H1 buying, what do you think is happening there? What is actually happening there is that the market is actually pulling back on H1, and that's why you have this indicator. You still have that line still seated there. Okay, now after you see that price was going up, you don't do anything because you know that daily is actually selling. And then you now see that your trend line, you connect the first two dots and extend it, and then that trend line got broken. And what else are you seeing here? There's a confirmation here that MACD has been trying to inform you that this market is exhausted, and any moment from now, it can be returning back. That is how to use it. Overbought and oversold regions, overbought region right here is just giving you an information that market is likely going to reverse from here. It is not telling you to jump in outrightly. Okay, so now market has crossed here on H1 now, confirming the daily trend. You get right in and begin to catch pips. Okay, now let me use H1 time frame for the analysis and then go to smaller time frame. You can use this to scalp. If you want to scalp, you do your analysis on H1, for example, and you see that price is trending below 200, okay? And you go to your smaller time frame. Let's say let's take note of this zone where we are right now. Let's take note of this zone, from this zone downwards. You can see that price is trending downwards, okay? Let's see if we can find that on the 5 minutes time frame. Let's set, yeah, we got this zone. Now the 5 minutes time frame, price is trending downwards. And every time you see your price, your price going upward on the 5 minutes, remember it's a 5 minutes time frame, it's going to do its own trend movement. Then when it is done, when it is ready to resume the trend on the daily, on the H1 time frame, remember the same thing we did. Remember, right here, what are you seeing? MACD has informed you that price is at, MACD has informed you that price is at the overbought zone. The same thing happened here. It was at the overbought zone, but right here it was still going up. That's why I said an overbought zone gives you an information that something is about to happen. It is not asking you to jump in. Please take note of what I've just said. After the first information came up, the second information came up again. Still telling you, well, I will soon be changing direction. Okay, this is the second information we got here. And what happened? This trend line got broken right here, and price broke back into this moving average and resumed the trend, and this was another cross here. You can see that there's another cross there, and what happens? The trend resumed. Now you can see we now have another cross here, the 50 and the 20 crossing. There is a golden cross. That's a golden cross. Now this 50 and 20 cross confirms the H1 trend, and what do you see? Price trended downwards. All of this, price was doing this trend from this cross here. You can see that price began to trend downwards, because why? H1 is a downtrend. So immediately H5 crossed here, the trend continued. Now, having said this, we are going to be looking for our overbought and oversold on the MACD. The only overbought we had here on this 5 minutes trend was this one we have here. Okay, this very one we have here. And look at when it happened here, price came down. So sometimes you might not have these overboughts, these very overboughts play out, immediately, like it played out on H1. You might not see it happen often on that time frame, but you can find, if you're trading the H1 time frame, if you're seeing a trend on the H1, for example, that the trend is downward on H1, and you want to look out for this thing I've just showed you here, an overbought MACD. This is a very powerful strategy I'm teaching you free of charge here on YouTube. So make good use of this. Okay. And don't forget, I also run mentorship as well. So if you do not understand how to do this and you want further knowledge, you have to DM me directly for mentorship, and you'll see my link. You'll see the my contacts down there in the description. Okay. So you can see that when price got to overbought, what happened? It began to trend downwards. Okay. It began to trend downwards. This is a lot of pips to catch, guys. This is a lot. Your stop loss can be above the 200 moving average to keep you safe. Remember, I said use small lot size, because you are actually swinging this trade and you're going to still make money. Now, that's it. I'm teaching you two things right now on this video: how to follow the trend using the bigger time frame with the cross of the moving average. This is a lot, guys. This is a lot. Now, when you're done with this is, remember I said price will keep doing the upward movement and downward. Ignore the upward movements. As long as price is trending downwards on the bigger time frame, the upward movements you see here is just a pullback. It's just a pullback you're having. Probably, let me check what happened right there. You can see that it's a pullback on H1 as well. Where I marked is showing us a pullback on H1. This is a pullback. This is that minor pullback. You can see this. Price retested the 50. While on 5 minutes, it showed up like a full move by itself. It showed up as a full move. You can see that here. That was that move you saw there at H1. So immediately price was ready to resume its trend. Remember what I said. What do you see happening here? The MACD, the 2 moving average is crossed again. This is a golden cross. And as long as price stays relatively under that, you can see what I was telling you. Whenever price is about to change direction, following the trend, you see that H1 says I'm selling, and then you see an overbought signal, a completely overbought signal on MACD on smaller time frame like 5 minutes, 15 minutes, 1 minute. Just know you're continuing that trend. Okay, this is another scenario. And then it gave you an information that is selling. On a sniper entry, you could have got in here, but on a conservatory entry, you wait for this cross to happen to confirm that movement. Once this cross happens here, you begin to look for trades in that direction. Trades in that direction. You can see that right here, trade in the direction. The moving average is still price is still below the moving average. It hasn't crossed yet, and you're seeing price spiked out. This is a fake out, okay? And then right here you can see it's overbought as well, and then it continued downwards. You can see the same thing happened here again. Overbought. You always have to wait until this cross happens. When the cross happens, you begin to take trades in line with that trend, especially if you're scalping, okay? So if you were in this trade, you would have, your stop loss would have been above here, somewhere above here, and all of this noise here wouldn't have caught you. All this noise here that happened, okay, wouldn't have caught you. Even if it did, remember you're using a safe lot size for your account. So just stay on it, be looking out for all of these overbought signals as long as price is downwards on the H1. Now look at this again. Price was trending downwards. Remember, price is below 200. It just did a pullback. I'm sure this was a 1 minute pullback, and price got to this point, and what do you see? Overbought signal. You just know the next thing that's going to happen. You know that once price closes back into the 200, that trend continues. You use a small lot size for your account and continue. Price pulled back again. This was a long trend, and this is why I love the boom 1000. When it's trending, it's trending. If it's going down, it's going down. It's going up, it's going up. These are the kind of pairs you would like to trade, the kind of instruments you would like to trade. And why I love boom, they respect technical analysis a lot. I like this for boom for this kind of trading. I like this better than I would like to trade forex with this. I'm going to also show you how I do this on forex. Okay, so this is for boom. This is for tradingderiv.com. You know, if you're trading with deriv, boom, crash, synthetic indices, this is for it. I'm gonna do another video just after this one to show you how to use it on forex, because this video has already gone a long way. This is already this is about 15 minutes, about 28 minutes recording already. I'm gonna make sure I make it shorter than this, so you can see every time price goes to overbought, keep looking at the MACD. Every time it goes at overbought, as long as price is trending below the 200, it keeps respecting it. So this is just what I wanted to share with you. And now right here, price is at overbought as well, but this overbought showed up somewhere around here. But also observe, like I said, if this price doesn't come back to cross the moving average to resume the sell, you cannot sell. Sniper entry will be right here, but you could, if you're entering here, it could be a sniper entry, okay? You could enter there with a smaller size and watch to see what happens. Remember, this is boom, and boom booms upward. So you have to use a smaller size. And now, if it's going to resume the sell, it has to come back into the 200 moving average and give you a retest for it to continue. That's what I mean. So right here, another thing you have to consider is that price has just broken out of my trend line. I actually left this trend line to know when price is breaking out so I can take this trade, but I slept off. Okay, I have to sleep. You know, as a trader, we are so stressed. But then, seeing that the price has broken out of my trend line, I know that price is going up. But still, I still have another point here to contend with. Still have another point here, a resistance here to contend with. So this is not over until it's over. So if it continues to go up to that point there, okay, and let's assume this is just a mere pullback. Let's assume it's a mere pullback. If it goes up, you know, to this point here, and it comes back and crosses back for a sell, and then the MACD confirms it, I'll resume the sell again, because this is a strong downtrend, okay? But if it doesn't, if it continues to go up, then it means that for now, the trend has changed direction and it's going to start going up. Of course, it will continue going up and going up to all of these points here, remember. So why I'm saying this is because if you check the daily time frame, look at what is happening in the daily. So I've been marking this movement from when this trade started until when it crossed. So boom 1000 is kind of my favorite instrument here, but it's very volatile in spike, you know. It's not as volatile as boom 300 and boom 500, you know, but it's the spike is longer than what others will give to you. But so I love it. It's safe. It's safer to grow small accounts, okay? So you can use it to grow your small accounts if you have a small account. So you can see that why I'm saying price can actually go back upward. Yes, it can do this and can go back upward. That's the reason why I marked this trend line on the 15 minutes, and I'm going to start observing. So you're not going to force the market to give you what it's not ready to give you. You just have to look out for these things and trade safely. Please practice this. Please drop a comment on the comments section. Okay, share. Let me hear what you have to say about this strategy, about this method of trading. Okay, if you try this out and it helps you, or you have any challenge, please come back and drop your comment. Let's know where you're having a challenge. Okay, so this is it for now. I'll be done with this video in few seconds. Okay, so price has just broken out of this zone. The next thing I want to see is a retest somewhere around here. And like I said, in order for me to follow this, I will have to I'm going to go to the 1 minute right now. So if this pullback happens and it wants to resume the buy trend, you can just go to the 1 minute, okay, and look for this. So on the 1 minute, you have a lot of opportunities. If you're scalping, you have a lot of these opportunities where you have price trending downward and keep seeing this overbought. Just follow it that way. This is one of my best strategies. You can see overbought and it came down. You can catch few pips from here. You can catch a lot of candles from here. You can see overbought and it came down. Overbought and it came down. So now this is for scalping, okay? This will really favor you if you're a scalper. Now when it was pulling back upward, remember that price has crossed here for a buy. You can see the oversold right now. You are beginning to deal with oversold. And when it got to this point, what happened? The price spiked upward. This is my best strategy, actually. So I'm just giving this out free of charges, okay? You didn't have to pay me to get this. You can see price was trending downward and this is overbought. And look at what happened. It came down. Remember, daily is a strong downtrend. H1 is a strong downtrend. H4 is a strong downtrend. And this is how to get in at sniper entry, okay? Using the MACD. The MACD overbought on a smaller time frame. The MACD overbought on a smaller time frame. Then, if it is a buy trade, okay, you look out for, this was the range. That's the reason why we didn't have. And even on this trend line that was drawn here, you can see that when price approaches the trend line, you can see that at this point it approaches the trend line, it gave you an oversold signal, and then it spiked upward. This is what my students pay for to get, one of the things they have gained from me. So you're having this free. It came to overbought. That's why I said I like to do this, you know. When you get this, you see it spiked upward. Continue to spike upward. It continued to spike upward. So this is how to use it. When it was selling, it came to overbought. Look at what happened. It sold. So you can continue to do this using the 1 minute time frame. So these are the different ways to use it. So after this video, guys, look out for the next video. I'm going to post on how to use the stochastic to actually do trend continuation, because you want to be with the trend, because the trend is always your friend. If you go against the trend, guys, I can't guarantee you, especially on boom crash, you know they spike a lot and you're going to be bleeding your account, especially if you're not using the right lot size. So this is it, okay? Follow this method and catch a lot of pips from here. So see you guys.